Okay, this is first day back, first stream. Hope the audio is hope the audio is audible. 10 minutes from open, so let's get this. Mm, yep, let's go. Chart is a bit messy, but not really too much into touching it a lot right now. I'm just gonna start marking out what we need. And we get right into it first, trying to see what news is ahead. Okay, a very light Monday. We've got new home sales at 10 a.m. That's it. That's the only thing we have for the whole day. So let's get into it. So, getting into the weekly chart, there really is nothing that is very interesting right now. The weekly chart, this high to high, that's a balanced price range. I'm looking at that. If we can reach below it, I would expect a fast expansion down towards this fair value gap and a daily inversion in here. But until then, there really is nothing I'm very interested in. The only thing I'm looking at right now on the weekly chart is the constant encroachment of this weekly candle, the previous week's candle. Mm, Let's get this a bit big. I'm not sure. It's down here. That's the constant encroachment of the previous week's candle. We had a huge wick. This move lower and closing above. Okay, going into the daily chart. Really, the only thing I'm interested in or that I could see is this high to this low, the mean threshold of that. I'm interested in that one. So I'm gonna do that. Okay, wait, I'll just drop down to the lower time frames and then mark that out. What else do we have on the daily? We have just noticed we have closed above this inversion in here. That should have had holded price lower if it was so strong, especially with a new opening gap here. But we have closed above it, and we have closed above this inversion as well. I'm just looking at it, and I'll just look for how are we going to react once we reach there. I'm not saying it's just going to inverse price, but reaching onto it, how do we react? That is how to just look at it. So, yep, nothing else. Dropping down to 4 hour chart. Let's clean this up. We don't need this. Okay, now that's very significant. So we've got a huge SMT with ES. ES was able to come up here and take these highs. Uh, YouTube's not receiving enough video to maintain smooth streaming as such. Okay, anyways, we have got a huge SMT with ES, so that could this high, the previous week's Friday high, that is a possible high that could send us to this lows. Why? Because that could be the secondary distribution of a market maker buy model, which the smart money reversal was up here. So I'm just looking at that. So this high right in here, we're able to come as high as this high. This is the SMT high. I'm looking at that. As long as so what does that mean? As long as we don't trade above this high in here, there is nothing telling us that we want to keep going higher. So we need to reach above this high before we need to reach above this high before we look for any eyes. Why? This could be a market maker sell model. That's its secondary distribution, the SMT. Our targets should be down here until we reach above this SMT high. So I'm just looking at that. And what else do we have? About 75% of the time on Monday or Tuesday, we get back into the 50% of the previous Friday's range, which in this case would be this. Yeah. So as long as we actually don't reach above this high, it's not so obvious that we want to continue higher. Especially why? From you see this new coupling gap and this other new coupling gap here, from there to there, we have already reached event horizon. What does that mean? We are most likely going to reach up into this new coupling gap. 50%. I'm gonna keep that up. And I'll also be looking at this inversion in here. So that's all I have for the 4-hour chart. Nothing else is very interesting. Dropping out the hourly chart. About 4 minutes still open. Um, There's another SMT up here. I'm just noticing that. I'm not going to use it as anything right now. And this should be the new week opening gap. Current new week opening gap. So if we can reach up back into this, we're most likely going to reach up into the current week's new week opening gap. We've got no SMTs up here. Yeah, I'm just going to just drop down to the 50-minute chart and start marking out these cycles. So right now I'm not holding any type of bias or any type of one-sided net in price. All I'm doing is just reading price and I'm waiting for it to show me what it exactly wants to do. Nothing is obvious right now. We have marked out our levels, not done yet, but yeah. So this, you see all this in here, that's accumulation. The lows, they have not been hunted, at least on ES, but I mean on NQ. So ES have taken those lows. So if we can reach back into this low, know that we are most likely going to reach back down into this level, which is the 23,360. Previous cycle high. Previous cycle high. This is the previous cycle high and also the accumulation size. So once we take that high, how do we react? That's significant. Go down. Previous cycles down. Okay. We have also taken the previous cycle's low. Bottom. So you see, this is very obvious here. This is an accumulation. This right in here, that is accumulation. And how do we work around it? That's what I'm trying to see now. How do we try to work around it? You see how we have this high in here, and then we really don't have any. Okay, so this is the only major SMT in here. See that? So that is where secondary distribution happened, right up here. So what does that mean? See this high in here? That is a range. Now for the people that struggle with knowing which range you should see, right here. Now for this range, this high to this low, that is the range that you should be looking at. From this high to this low, that is the premium to discount. You don't want to be seeing this whole range. It is from this high to this low. Premium resides up in here. I don't need to mark that out. I really don't. I can eyeball that for now. So I'm just going to drop down to the 1 minute chart. The key here is knowing that this was accumulation. The high has been taken. Now you want to see, now I'm trying to see how do we use this. This is a possible inversion. Oh, we're moving fast. Godly. We're moving fast. Wait, do we have any news? We don't have any news. I've already checked that out. Just home sales, new home sales at 10 a.m. That's it. But that was it. Now, okay. Now this is what I'm noticing right now. Hope the planes. Hope the planes audio is not very distractive. But anyways, so the accumulation high, it has been taken right there. The accumulation low, it has been taken right there. So for me right now, if we can close just like that, trade above this inversion, see that? This inversion right in here. If we can close above it, I will enter right there. Stop loss would go down here. Stop loss would go down here, and I'll look for 25 handles up into here. If so, unless we do that, I'm going to need to wait for 9:45 until we reach back into 9:45. There's nothing for him to do. I've done my analysis now. I'll just wait, and I'll keep on telling you guys what I'm looking for according to my model. I won't be trading on this screen. I've got another screen where I'll execute my trades, but I'll share that as well. We have got a huge first presentation in here. This whole candle, that's first presentation, accumulation high and accumulation low, both have been taken. If we keep going lower, my target would be, my initial target at least would be this level here. That is the 50% of the previous Friday's range. We're most likely going to reach down into this. That is statistically, that is what's going to most likely happen. At least the statistics, that's what we expect right now. And the other thing I want to say is notice we are in a new week opening gap. This is the high and this is the low. We are in between it. So for anyone trying to cut huge range like 50 handles, 75 handles, 100 handle range, don't be trying to do that while we are in this new week opening gap. It could get messy. You want to just be playing in here, but once it actually trades out of it and shows you energetic price moves out of it, that's when you want to be entering your huge moves. You don't want to be taking huge trades while we're still in here. ES was not able to come down and take these lows in here. So that is significant. Why? We've got SMT here. If we now can close above this is right now an inversion fair value gap. That's not a short. I wouldn't short price if we reach up in here. That's not short for me. Thanks, bro. We got this. I won't be reading the chats much while I'm actually trading, but once I'm done trading, I can start chatting around. So just like I said, I won't short this, but if we actually close above it, I'll get in right up there. Stop loss would go right down here. and my take profit would be up in here. Mm, very fast markets. Waiting. Okay, we didn't close above it. I had my limit order ready, but we were not able to close above it, so not getting it there right now. What do I mean by close above it? I actually need, you see, this candle's body closed at the constant encroachment of the first presentation. I wanted it to close above the high of it. I mean, the high of this inversion. If it had done that, I would have gotten in, but it didn't, so I'm just waiting. It's most likely would right in here. I don't want the chart to get messy, that's why I didn't mark it out, but you see this gap, this huge red candle in here, that is the first presentation. Yep, it closed above it, so I'm in. I'm in a trade. Let me show you guys what the trade is. I'm in a trade, wait. I could be stopped out, but I don't care if I'm stopped out or not because I just perfectly executed according to my model. So, show you guys the trade. It's on the other screen. Once it finishes, I'm going to show you guys the actual screen, but I'm in a trade right now. This is the entry, got in right there. Take profit is up right here. Now we just wait. I don't do anything. I just wait for price to do its shenanigans. But for the sake of transparency, here is I'm trying to show you guys the actual screen. So here it is. Nope, this trading view. So I told you guys I got in right there. That's my entry. That's my take profit up here. Now I don't care whatever happens. I won't touch the trade. Let it hit my stop loss. Let it hit my take profit. That is whatever it does. That is price. I don't really care. So that's executed across two accounts. I'm copy trading two accounts. This is my first day back streaming and my heart is kind of racing. I'm not gonna lie because I haven't traded while I'm speaking in a long time. So my take profit should be at 15,300. 513. No, don't hide that. Don't hide that. Don't hide that. I'll try to explain more about my model as time goes. But right now, this is very messy. Oh, the copy trader is off. Jesus. Yeah, I knew something was off today. Because it's actually my first day back trading. So what I would do right now is if he gives me that price again on the other account, I'll actually get in. If it doesn't, I just missed a trade by the other account. That's it. Before it reached the take profit target, if it goes down back here, I'll get in. If it comes back here before it reached my take profit target, I'll be getting on the my other. I messed up and I didn't set the nice. Okay. Now if it goes to my stop loss or take profit, I don't care. Just like I said before, I have executed perfectly to the model. It's almost at my stop loss right there. Came back in. I was able to take the trade on my other account. Why is this? Why does this keep on coming up? So I'm just gonna keep this on the other screen because it's kind of getting messy. That should stop me out. That is the first trade of the day. Let me turn on the copy trader at the moment because I just got the chance. So I don't take more than 3 trades a day. Starts. It's on. Okay, now it's on. Okay, so that stopped us out. Do I care? I don't care. Why? I just executed perfectly to my model. Now what am I waiting for? What I'm waiting for right now is, so you see we have traded up and then down deep into the first presentation. What did we do when we do that? We closed below this inversion fair value gap. So what I'm waiting for right now is I want us to close above this again. I want to see us close above it. And after closing above it at 9:45, I want to see some type of bullish PD array. Unless I see that, there's no long for me. I cannot be in a long. I'm waiting 4 more minutes. That's my model. I'm gonna wait 4 more minutes, and that. What's up, Big Mod? How you doing, bro? So I'm just gonna wait for 3 more minutes right now, and then if I get a bullish PD array after we close above this, I'll be longing. Unless we do that, there's no long for me. I won't be taking any longs until we do that. Cop traders on. So as we wait for the next trade to come around, I can talk about some other stuff. Oh, the other thing I want to say is, so as long as we are below this inversion fair value gap that has marked out, I'm looking for lower prices. I'm not looking for higher prices, but that does not mean I'm going to use the inversion fair value gap to take a short. Why? Because I could easily get manipulated. Now we have got 2 more minutes. After 2 more minutes, I want to see bullish PD arrays being created. And I'll use that to get in along only if we are above this inversion fair value gap. Seems like it was just no, the nature of my trading for the new people in here. I have my stop loss is always certain handles. I never have a stop loss more than 13 handles, and my take profit is to start the day is 25 handles. If I lose a trade, I add 13 more handles, and if I lose again, I add 13 more handles to my take profit. As long as I don't lose 560. Now the previous trade, I was just looking for $500 in here across 2 accounts. That should have been $1,000. I was looking for $500. I was risking 250. Now, because I lost that trade, what I'll do on my second trade is I'll look for $750 per account, and my stop loss will still be $250. That would make much more sense to talk about it in money than than ticks. So as I said, as long as we're below this inversion, I'm looking for lower prices. Look, if price tries to keep going lower, my target is down here, in here, the 23,363. Okay. What does 945's 1 minute candle try to do now? That's what interests me. It's expanding a lot. It's expanding a bit too much for my stop loss or for my model. Now, what I would look for is, can we get a fair value gap in here? If we get a fair value gap in there, I will get in at the consequent encroachment of the fair value gap that's created here. That's created in here at the 945 candle. I wouldn't. If the fair value gap was created at 946, I wouldn't use that as a CB or a fair value gap. That is part of my model again. No, I'm not in a position right now. I got in right there. I used this. I was stopped out in like about 4 minutes. So right now I'm not in a trade. I'm just waiting for another trade to form. Okay. This is getting a bit shaky. So we created this long candle, this red candle, right? And now we're creating this green. So I'm going to use this as a bear shoulder block. What I would do is please sell. Um, trying to fix my, so this is a huge candle. I don't normally try to trade on huge candles like this, but so 58. So if it gets right there, it should tag me in. If it can go somewhere down here, if it can come here, I'm going to use this. I'm going to get in right there, and I'm going to look for a trade down to here. I'm not in the trade. I have got a limit order. It has not tagged me in. But now, if this goes up and trades, now I'm just trying to tell you guys about my rules. There are a lot of them, but now if and as long as we haven't traded above this, you see the open of this candle, as long as we haven't reached that, I will be trying to get in down here. I'm not in a trade, but I've got a limit order down there. That would be my entry. I'm not in the trade right now. As when it if it can trade below this, I'll get in, but not right now. Okay, we have reached that. So I wouldn't want to see it close above this little gap in here. See that? If it tries to do that, I wouldn't want to be getting into any trades. This is a significant low. This low down here, 945. Very strong low. So I won't be getting in here right now. Why? I told you guys if it trades above this, I don't want to get in. That is against my model. So I'm just waiting for another trade. Now, the next trade can only form at 10 o'clock. That's what I'm waiting for. Or I would need to see it stay below this, and I want to see it having some energy trying to go lower. If it can do that, I might get in below this candle in here. Otherwise, there is nothing for me right now. Nothing for me to take a trade on. It's all against my model. Significant, what I just marked out is the macro times, that's what I just marked out. Notice at 9:49, we reached up into this inversion. We have not closed above it. And as soon as the macro started, we have started expanding lower. Now I have got my eye set on that. How does it want to use that? How does it want to move around with that? As long as we stay above this fair value gap in here, we are most likely price is going to try to reach up above this, above these highs. If we can have speed running below here. So normally what I would have done is, you see this candle, it's huge, the 945 candle. I would have tried to get in below it, but my stop loss wouldn't allow me to do it. Why? It was 32 handles of a candle. If it was 13 handles, I would have just tried to use it as a bearish order block. I know it's a red candle, I know, but I would have tried, or you could say I would use this one as a bearish order block. But why I would use that as a bearish order block is because of the 945 candle being there, or the low of it being run. That's how I am able to find the right order blocks, the right fair value gaps, and what I shouldn't use and what I should use. That's how I differentiate between them. Okay? Where you marked above the stop loss. Which stop loss? You mean the what color? Which, the green one? This? Or we're talking about the one I had right over here at 9:45. We keep on trying to go higher, trying to go higher, trying to go higher, and hit this inversion in here and failed to move higher. So we could start having some speed. I could technically get in below this candle slow in here as a bearish order block, but I wouldn't get in there because this is getting a bit nasty. I would just wait for 10 o'clock, and at 10 o'clock, what do we have? What does price say at 10 o'clock? I would use that to get into a trade. The horizontal where you marked above the stop loss. I think you're talking about the one here, the one that was here. It's a lot to explain, but that was my disqualification point for a short. If you're the one, if you're talking about the one that was right here, that was my disqualification price point. If price traded above that, that shows me right now for the next 15 minutes we are not going to go lower. That's how I see that. Once we traded above that candle, this candle's open, that shows me that for the next 15 minutes I don't want to be getting in any type of shorts because we are in a market condition that wants to go higher at least for 15 more minutes. Now, since open, we have not actually done anything solid. We have just been bouncing back and forth, back and forth, back and forth. When price does this, we are most likely going to get out of this range at the specific times. 9:45. If we cannot do that at 9:45, it's it is 90% of the times better to just wait for 10 o'clock. Just wait for 10 o'clock. Be patient, wait for 10 o'clock, and you'll get some type of swing that's going to send price out of the range into the direction that it wants to expand to. Right now, I'm looking for lower prices. I'm looking for 10 o'clock to give me a bearish PD array. Now notice, I want you guys just to notice this. I know I want to be in a short. I know I want to be in a trade that could send us lower. Right now, five minutes before 10 o'clock. That will be only disqualified when we close above this inversion in here. As long as we don't do that, I have nothing. I have nothing to do. I'm just sitting on my hands. I'm waiting for something obvious to come up. The seconds ago, I said I am looking for lower prices. That could change right now if we can close above that inversion fair value gap. Yep, we just closed above it. So that shows me we're currently in a buy program. We are right now in a buy program. That's how I'm seeing this. Why? Because we disqualified a PDRE that should have sent us lower down into the 50% of last Friday's range. But we disqualified that. So now I'm looking for higher prices right now because it closed above this, and I'm going for 10 o'clock. I'm waiting for 10 o'clock to give me some type of bullish PD array that I can take a long from. These highs here, this relative equal highs, that's the first target. And then this right in here, this line, that is event horizon. Event horizon is the midpoint between two new week opening gaps. This is the current week's new week opening gap. This one is a very old new week opening gap. Take out your Fibonacci and measure it from the high of it to the low of this one. The midpoint, that is event horizon. So how would I use event horizon? If we can reach up into event horizon, that makes it that gives us a highly likelihood of price continuing to reach up into this new opening gap. That's how that's how we continuously find the draw on liquidity where price is trying to move. By the way, I'm ask you guys one thing. How is the audio? How is the mic? Is it good? Is it better than what it used to be? Big Mod would know that more than anyone. By the way, Big Mod, you back? Let's just finish trading for the day before we talk. Actually, good, bro. Thanks. Okay. Now, what do we have here? That's what I'm interested in. If this candle can close, it's expanding again. It's just expanding and expanding. Hmm. What do we create here? That's what I'm interested in. Let's see it close. Let's see it print out fully and close. And I would see what I can do with it. Significant. Okay. Uh, it have got a huge wick. Oh. Right. Okay, very interesting. So if you can trade above it, I'm going to use it as a bullish order block. Place buy stop. It's kind of risky, but that's what my model tells me. So if you can trade above this, I'll be getting in a long. Blah, blah, blah. Kind of risky, but that's what my model tells me. I don't care if it hits my stop loss or hits my take profit. I know my model works. I know how to use it. So I just got in right there. My stop loss is down over right here, and my take profit is 1 to 3 up here. So this could instantly stop me out, or it could go. I would say it not a very easy trade, but that's just perfectly according to my model. Just perfectly according to my model. But I'm saying it's a hit. It's a hard trade to get into because it took. You see how it came up and took the buy side up here right at 10 o'clock. That could be the shift that could send us lower. But the only thing I can do is get in right there so that my stop loss is big enough and look for us to reach up into um 23,554. That's my model. Now, what? Just like I said before, once I get into a trade for the new people here, once I get in a trade, I don't get the to make the trade go break even at some price point. I don't move the take profit. I don't move the stop loss. I just get in and I commit to the trade. It's stop loss or take profit. Just go. I don't care. That's that is the model that has paid me every single time. I don't care how the single trade goes, but all I care about is did I just follow the model or did I enter not according to the model? And that I don't feel bad when it hits my stop loss because I know it works. I know that's what feeds me. What feeds me, what takes care of everything in my life is doing and executing the model every single day. That's just it. I don't have anything else to do. So right now I'm in a trade, just like I said. Once we take this high, if we can take this high in here, the 10 a.m. high, we should have speed above that. We should have speed once we take that high. But until we take that high, the trade have got a lot of risk. Again, I'm risking just 250 and I'm looking for $750 per account. Now, we just traded above the 10 a.m. high. That is very, very significant. Very significant. Once that happens, we should get speed towards that direction. In this case, it is go higher. That's 10 o'clock. Okay, now I would, as long as we don't trade down below this candle slow, Price is in a bullish in a buy program. Yep, it's going to be in a buy program as long as we stay above this low in here. Now, if this hits my take profit, that would be my day. I'll just end the day right there and right then. That would be the whole day of trading for me. If it hits my stop loss, I'll look for one more trade at 10, 15. And whatever happens to that trade, then I'll look for $1,000 because I've lost two trades and I need to make them back and make an additional $500. If you can make that, I'll try to do that. But if that's a losing trade as well, I would just end the day. Mhm. Mhm. I didn't mess up just like I did on the first trade. It actually copy traded this time. But wait, no, this isn't my take profit. I'm sorry. This is my take profit. It's up here, not down there. It's up in here. I just rechecked and it's higher. So, just like I said before, remember when the stream started, I said for ranges, what I look for is this high to this low. We right now are in the premium of the range. That's why we started getting a bit cruddy, slow, weaky. That's because now we are in premium. But we need to see price keep going higher once it reaches premium to show us that it is actually trying to move above this high. We don't want to see it starts retracing down back if it's actually trying to create a new higher high above this high. Last Friday's price action was crazy though. Jesus Christ. Like at 10 a.m. when Fed Paul started speaking, we moved 200 handles, right? Yeah, I think we'll take a look at that. We moved like exactly 200 handles. The last time I saw a move like that was, I think, the beginning of the year on FOMC in the PM session. That was crazy. It's exciting, but you don't want to find yourself in those type of trades. You just don't want to do that. Imagine doing that in a live account. It could crush you any way it wants. The sleep page, the I wouldn't dare get in those type. All I do is I just get in, get out, take the piece of the pie for me. I don't need much. I look for very small moves. I just take what's mine and just move out. That's all I care about. Small moves. Now it looks like a huge move today. This looks like a huge move. It's because we are not in a day that has a lot of volatility in it. It is slow, it doesn't have a lot of injection of volatility, so small moves look large. That's why it's not a very large move. Yeah, now we're moving just like that because of the time and price. Time is 10:10. What is that? The closure of That is the closure of the the 950 macro, and we also reached event horizon. Okay, once we reach event horizon, what we usually do is reach the event horizon, get back to the previous new opening gap, and then reach up into this one. We might do that, or we could just keep going higher. We'll just see. Just like I said, I'm not moving anything. I'm just waiting for us to reach up in here or come back to my stop loss. Whatever happens, happens. That's just the model. But that's a sign that we could now start going lower. Why? Now, if this happened at 9:06, 9:05, 9:07, 9:09, I wouldn't have cared much. But because it happened right at 10:10, that could be a start of a move lower. It could. How low? I would look for the new opening gap. But yeah, I'll be trying to explain algorithmic signatures just like what I said just right now. Small, how to pick up the right bullish order blocks, the right fair value gaps, the right inversion fair value gaps, and so on. It's a Monday, low volatility. Mm. If you guys, if anyone wants me to explain anything, I'm okay doing that because I'm in a trade. My hands are off the keyboard and so on. I'm just waiting for it to do its shenanigans. So if you guys want to ask me anything, do it now before the trade ends so that I have a free mind to talk about whatever needs to be talked about. Yeah, I would have wanted to see speed going above this, just like I said, that could be the sign that we could start going lower. But that doesn't mean I should get out of the trade. That could just be a 5 minute retracement. Lovely signature in here. How we closed above it, came back into the constant encroachment of the 10 a.m. candles week, hit that and started moving higher. You don't want us to close below it again. That is the sign that I'm looking at right now. If price wants to start moving lower, so we're still in the trade. Here is the actual trade in here. Copy traded across two accounts, this account and this account in here. See how we just traded back into that uh, event horizon and we are reacting to it again. We need to see speed above it right now. Otherwise, it's going to get crowded. Now, it is 10:15. Possibly, we should see algorithmic signatures in the next 3 minutes. In the next 3 minute candles, the 1 minute candles, three of the 1 minute candles, we should see signs or PD arrays being created showing us that price wants to move higher. Otherwise, we're going to start retracing. We need to see something in the next 3 minutes. 10:15, 10:16, and 10:17. That is also part of the model again. Okay? What do we get at 10:16 now? The same thing happened to the first trade, right? It got so close to the take profit and so suddenly shifted and went to our stop loss. Okay, you see this candle's high? You see this candle's high? As if we now that could be the high for the next 15 minutes. If we can't trade above this candle's open, we are going to start moving lower for some time. This is going to be a bear order block in here. This one 10:16. Just like I said, we needed to see bullish PD arrays created at 10:15, 10:16, and 10:17. We need to see us trade above these candles open. Otherwise, we're gonna start moving lower. So let's say I wasn't in a trade in here. I would have gotten in here above this candles open, the 10:16 open. I would have had a limit order right there and try to get in if we can trade above it. That this I wouldn't use anything but this as a bullish order block if I wanted to get in long. If I was not in a trade down here. Yeah. For the market conditions though. Jesus. It's not moving fast, one-sided. It's giving it, taking back, giving it, taking back, giving it, and taking back. You wouldn't want to see price trade below this candle slow. You wouldn't want to see that. At least I wouldn't want to see that because I'm looking for higher prices. If it trades below that candle slow, where most thank you again. We're most likely going to start going lower if it trades below this candle. There you go. That is the signature that I was looking that price is showing us that it wants to start moving lower. Now, just like I said, I won't move my take profit my stop loss to break even. If it wants to go lower, I'll just let it go lower. That's just my model. I would rather let it go lower and hit my stop loss. But I'll just stay into the trade and see what it wants to do. This is a bullish order block. So then I'm looking at this candle's week. If we close below the constant encroachment of that, we are going to reach back into it and start moving lower. Now all I'm waiting for is 10:30. That is the only time that we could start moving higher. Otherwise, I'm not expecting price to get energetic higher. Why? Because it reached a specific price point at a specific time. 10:16 at the event horizon point between these two new week opening gaps. There you go. That is the sign that it wants to start moving lower. Actually, it missed my take profit, I think, with one tick. My take profit is right there. It's right there. It missed it within one tick. Yeah, this is most likely going to stop me out, but it's just part of the model. Got in right there. Take profit was right there. It missed me literally with one tick, and it shifted and started moving lower. But what did I say? It could reach back into this. That's why. That's event horizon. Reach back into the new opening gap and then reach back up into this. Now, that is called experience. I would call it experience. And this down here is the previous bull corner block because it was created at 10 a.m. Jesus, this was this was kind of annoying. Just one take from the take profit and it's shifted. Now 10:30. I'm just waiting for 10:30 to show me what price wants to continue doing, getting into the rest of the AM session. Because we have created this high. If I'm stopped out now, if price stops me out, and at 10:30 we get some type of bearish PD array, I'll take that as short as long as we are below this high. But as long as at 10:30 we open up and create a bullish PD array and keep moving higher, we are going to try to reach up into this new week opening gap. I'm gonna go grab some water. Give me a sec. Couldn't find my water bottle. 4 minutes before 10:30. Not really, nothing that I've made, but I'll I will be. It's a lot. It's a lot to go through. It will take time, but I'll go through it. Mm. See, it's fairly simple, if I would say so, and it's very mechanical. Very mechanical. Mm. I can explain parts of it though. Wait, give me a second. As this trade goes on. Wait. Give me a second. I just want to keep I mean, the actual trade screen open when it gets to the take profit. That's why I keep on bringing this back and bringing going back and forth with this. Now, just see how perfectly it's moving right now. It has not reached my take. I'm not saying anything has happened, but I said at 10:15 right now, if we don't reach high enough and it goes against me in the next 3 minutes, it's going to stay like that. So it did. Now by 10:30, unless it comes 10:30, we cannot trade above this. That's how I see the algorithm. Until 10:30 comes by, we are not going to be able to reach above this. That's how I'm looking at this. So give me a second. I'm pulling up Figma to show you guys the model a bit. Mm. By the way, these are absolutely not easy conditions. These are conditions that you don't want to be trying to take huge trades in. My model doesn't allow me to stop trading when it gets like this because I can it usually I don't look for huge moves, so I can feel it within even 30 market conditions like this. But if I was one trying to catch huge moves, the weekly expansion and stuff like that, I wouldn't be trading once I saw this accumulation in here. Once this accumulation happened, we should have already started expanding in here. That was the telltale sign that we were going to have a hard AM session. Mm. Now that's 10:30. Okay. If this candle closes as a red candle, I would try to use it as a bullish order block, but if it doesn't, the low of it, I want that to stay if we are to reach up into my take profit or the high of the high that was created right here at 10:16. Okay. Otherwise, it's this candle is going to what's going to send us lower to my stop loss. Other if we can't shift in here, it's most likely going to keep on expanding and reach down into my stop loss. So I'm looking at this candle slow. Can we stay above it? I'm okay with the next candle reaching below it, but I wouldn't want any other candle to trying to trade below that. If that is the case, we are going to keep on expanding below this and to my stop loss. So keep all I'm looking at right now is 10:30s swing right in here. That should be what send us to my take profit. if my take profit is to be hit. Mm, my normal trades, by the way, on a normal day, they're usually 3 to 4 minutes long. They don't take this much time. They really don't take this much time. Like keep looking, that 1030 candle, that is what I wanted for it to shift us and start heading above this high. That's what I was looking for. But if it now reaches back below this candle, it's absolutely going to reach into my stop loss. You can explain, please, if you can. Yeah, I'm trying to load up where I have it right here. Give me a second. I ca- I can't explain it in just a couple of minutes though. But my entry models, I can show you my entry models, just my entry models. But I'm going to slowly teach and make videos around the full model. How I create my narrative, how I created why I'm going to do why, how I disqualify ideas, why I let go of a trade idea, why I stick to a trade idea, when I shift between bullish and bearish. That is the actually cream of the model. But give me a second, let's this trade end and I'm going to show you my entry models. I just have one, two, three, four, five. Wait, no. One, two, three, four. Just four entry models. And today we have seen two of them being excused, which is this inversion version. This not, I didn't get in here, in here using a fair value gap. I got in here using an inverse fair value gap. It stopped us out, but got another trade in here. Just playing with my take profit, eh? It's playing games. I thought I heard gunshots. That's why I made that face. I'm sorry. This fair value gap, I would use it at. This is a fair value gap that I would use to take a buy order. If I was not in, so I said if I was didn't got in there, I would have gotten in using that as a bullish order block. If we had moved above it before we moved below it, if you know what I mean. Now, if I hadn't, because I didn't got that chance, and I still wasn't in a trade. You see, when price created this fair value gap and reached back into it, I would have bought right in there and look for us to reach up into this new opening gap. So now what is it doing? It is respecting my model and the things that I want to see it respect. It's just continuously doing that for me. But still, this is a very cruddy market condition though. If it can do it this time and not retrace again, this should be it. There you go. So there you go. That wraps up my day. So I've got three accounts right now. This is what happened. Funny thing, we just made $1,000 across two accounts, but I've got three accounts that should put us on $1,500 for the day. But what happened was, I took a payout on Friday. I made a video on that, and I had only $100 of buffer left on the account. I wanted to just blow that account because I had only $100. I wanted to blow that account and buy another account and copy trade three new accounts so that I can take out around 7K in payout on my next payout. But when I tried to blow that account, I got into the trade and actually made $500. So that ended up becoming an account that I can actually trade now. That has room for me to trade in. That was unexpected, but it happened. That was luck. That was not skill. I'm not going to say that was skill. That was absolutely luck. But that wraps up the day. That's our P&L. Account one, 214. That's $495, $500, and $500. That ends the day for me. We'll be back tomorrow in here, and I'm working on some other videos. Uh, the strategy and the model that I'm going to slowly pick it apart and try to teach it. But these are my entry models right here. What was it? Elios. I don't know how to pronounce that, but sure. These are my entry models. Take a screenshot if you want. These are my entry models. These are the only entry models I have. Take a screenshot if you want. So we'll be back at it tomorrow. Until we speak next time, be safe.